What if I tell you the secret of not worrying about money again, and that it's not about working hard, but rather it's about working smart? You know why most of the people stay broke? Because they don't follow right money rules. They don't know that true wealth is built through building an assets and not just relying on income. And they also don't know that they don't need a high salary to become a millionaire. Rather, they need a right strategy to become a millionaire. So in this video, I'm gonna share with you step-by-step plan to build a wealth from scratch, even if you have to start from nothing. So if you are someone who's looking to build wealth, who's looking to achieve financial freedom, and who's looking to become a millionaire, then this video is definitely for you. Number one thing that we have to realize is to understand the money game. What do I mean by that? What I mean by that is we have to understand that cash helps us to survive, but the cash flow helps us thrive. Everyone actually earns income in a different form. It could be wages, it could be salaries, it could be commission, bonus, incentives, and so on. What we have to understand is we have to see where this income is actually going. So we have to understand if we are buying anything from our income, whether this thing is building an asset or is just an expense. So whenever we are making any purchase, we have to realize whether we are using our income to build an asset or we are paying for the expenses. What do I mean by that? An asset is something that actually puts money in your pocket, while the liability is something that takes money out of your pocket. Now let's just break down the assets and the liabilities. Liability could be buying car, buying clothes, going on a vacation, or any other expenses which doesn't put money in your pocket but rather take money out of your pocket. And in today's world, most of the people actually spend on these liability items because they want to feel good by looking at other people's. But that should not be the case. What you have to do is basically build an asset. And what are the example of assets? An asset is something that puts money in your pocket, such as stocks, ETFs, which pays dividend on a regular stream, and that dividend could be reinvested into a business or it could be used to finance your other expenses. Other example of the asset is rental property. So if you own a property and you're not living in that property, rather you have given property on the rent, that means you receive a monthly rent and basically you can use that as a cash flow stream, and this amount could be used again to buy another asset or it could be used to basically pay your expense. Now the third thing which is also considered as an asset, and that is either building a business or buying existing business. Once you build a business or you buy a stake in the business and that business pays a profit, that profit you can reinvest into a business, so expand the business, or you can use this profit to buy a stake in another business, or you can simply use this profit to fund your expenses. Now that you have understood the difference between the asset and the liability, I just want to share with you examples so you can really understand this concept. Let's just say you are a 30-year-old and you make an investment of $500 per month for 35 years and you make an average annual return of 10%. And you know what will be the portfolio value after 35 years? It will be whopping $1.9 million. That's a huge amount. And one thing that you can see from this chart is you will see the true power of compounding. And the power of compounding actually comes with the amount of time that you stay in the market, which means the more time that you stay invested into a market, the more the compounding will show its true color. As you can see in the chart that from year 16 onwards, you can see the true power of compounding. And that is why I'm really focusing that you have to start investing early and stay invested for a long period of time and be invested with the long-term investment horizon. And that is exactly how you will gonna build a true wealth. The number one issue that most of the people face is they don't know where they are spending their money. They might be making into several thousands or they might be making in six figures, but they don't know where exactly their money is going in. So the best thing is what you have to do, note down your all the expenses and see whether the expenses are actually putting money in your pocket or whether the expenses are actually taking money out of your pocket. So whichever the expenses which are taking money out of your pocket, what you have to do is you completely try to eliminate them or try to reduce them as much as you can. The money saved from the expenses now you can put in into investment, and that investment can earn somewhere between to 7 and 10 years roughly on average. And what it will do, it will make a miracle for you because over the period of time you will see the true power of compounding and you will become so addicted to it that you will try to save as much as you can instead of spending on either on the necessary things. Now that we have understand the money game, what we have to understand now is avoid a debt trap. And what is debt trap? Let's just say if you want to buy something, but you don't have any money right now to buy. So what you will do? You will take a debt. And what is debt? Debt is basically you're using your future income in order to buy something. And you know what are the most favorite tools that's been used for the debt? Credit cards and buy now pay later scheme. These things, I mean, the whole world is actually suffering from them because of easy utility and easily availability of them. And what happens is you start using your future income in order to buy those things, and by the end of the month you don't have any money saving. And what you do, you using again and again, again and again, and you stay into vicious circle. So what is the first thing that you have to do? Go to a step number one, which is look at all the expenses, cut down all the expenses, and start saving and start investing. From now onwards, you don't buy anything on the debt. Avoid using credit card or buy now pay later scheme. What you have to understand is if you are buying something that is taking money out of your pocket, don't buy it with the debt. If you are buying an asset, which means an asset that is putting money into your pocket, then you can use a debt. That's the only condition. Let's just say if you're buying a real estate for the rental purposes, or you're basically expanding your business and you borrow money from the bank, though it is a debt, but what is being used? It is being used for the productivity. Means you deploy these funds in order to expand the business, in order to buy a property, and from that you will receive cash flows, and that cash flows will basically finance the debt. So by this way, nothing is going to be going major from your pocket. Rather, the debt's going to be financed by the productive asset itself. So in this case, you can only use a debt. But if you're buying something which is not putting anything in your pocket, please avoid taking that. You have to remember two general rules in order to buy anything. If it doesn't pay, don't buy it, or even don't buy it on a credit. And number two is if you can't afford five of it, don't buy either one of it. So the step that you have to remember is stop financing anything that doesn't pay you back. Now that we have discussed about the concept of income and expenses, asset and liabilities, and also we don't need to use debt in order to finance the expenses. The other things that we have to keep that in mind, how we can actually save our money. That's also a very important thing. And how we can get the best example for saving money. We can get the best answer of saving money by looking at the habits of the wealthy people. You know what's the difference between common people like us and the wealthy people? Most of the people actually save to spend, but the wealthy people, they save to invest. There's a quite huge difference in the mentality. You can see again, money has a very sentimental value. And that's what we are trying to understand. In order for us to become millionaire, to achieve financial freedom, we have to look at the habits of the wealthy people as how they save the money, how they invest the money, how they basically track their expenses. And that's the things that we have to adopt in order to achieve the financial freedom, in order to become a wealthy person in our life. The rule that wealthy people follow, and I know most of the people don't know, wealthy people spend about 66 to 75% of their monthly income on the expenses, and they save about 25 to 33% to build an asset. There's a huge difference. There are a lot of people who just make 100% of their income to finance their expenses. But on the other hand, what are the wealthy people doing? They are saving a huge chunk of their income to build their asset, because they know as the assets grow, their cash flows will also grow. And as the cash flow grows, they know they can use the cash flow to reinvest, or they can use for their own purposes. And that is the beauty again of saving and investing and reducing your expenses. Now that you know that how much you have to save, which is 25 to 33%, you don't get discouraged even if you are making less amount of money. Even if you are making $2,000 per month, save 25 to 33%. What is important is the consistency. So the step that you have to follow is to automate your savings and investing. At the end of each month, you receive a paycheck, and out of that paycheck, certain portion should be directly deposited into your investment account, and that money should be invested into either stocks, bonds, or any of the financial asset or any other type of asset that you prefer to invest in. But please, please start saving on a consistent basis and start investing on a consistent basis. That's the only way you can achieve financial freedom and can come out of the rat race. In the very first section, we discuss about the expenses and how we have to track our expenses and save them. Now in this section, I want to discuss about how you can increase your income, which is also very important because as your income grows, your saving will also increase and that will be invested, and over the period of time that will be compounded and you will have a more cash flow. In order to increase your income, what you can do is basically find high paying job within your existing sector. You could also learn high paying skill, which could be coding, which could be copywriting, sales, digital marketing, and so on. And number third thing that you can do is start buying a business or build a business, and that business should be solving a real problems and people are actually taking benefit from it. That's the only way in order to achieve a success in the business. You have to keep that in mind, that what is the aim? The aim is not to just make more money. The aim is to make money even when we are sleeping. Now that we have looked at the most important topics of money and the different steps through which we can cut down our expenses, increase our savings, increase our investments, and ultimately increase our cash flow. But the question arises, what is the real point of having money? The real point of having money is to achieve freedom, is to have peace of mind and control your own time. So forget about chasing status, chase the financial freedom. That means passive income, that means no debt, that means your cash flow will be basically financing your expenses. All things sounds good in order to achieve freedom, in order to achieve peace of mind, and in order to live a life that everyone actually looking forward to it. If you like the video, please hit the like and subscribe button.